Welcome to Talk Tickers, where we break down the market moves that matter. Today, we are diving into a really wild earnings event, one of the most paradoxical of the season, actually. Corning. They dropped a stellar report, they announced a mega deal, and they raised their guidance. And then their stock fell. So let's figure out what happened. So here's how we're going to break it down. First, we'll set the scene and talk about this paradox. Then we'll unpack the strong results and what management had to say, and boy, were they bullish. After that, we'll solve the mystery of why the stock dropped, and we'll finish up with our take on what to watch for next. All right, so picture this. January 28th, Corning reports what by all accounts looks like a textbook Grand Slam quarter. The numbers were fantastic, the future looked even brighter. But the market's reaction? It was swift and it was negative. It was a real head-scratcher for a lot of investors out there. And that gets us to the big question of this whole explainer. You've got a clean beat on earnings and sales, you've got a guidance raise, you have a landmark multi-billion-dollar deal. So what on earth drove a nearly 5% drop on the day? That is the puzzle we are going to solve together right now. Okay, let's start with the results themselves, because you have to understand, on paper, these were just fantastic. This wasn't some kind of mixed report. It was strong, pretty much across the board. So, Corning delivered a really clean beat on both the top and the bottom lines. Their core EPS came in at 72 cents, which just edged out what the street was looking for by a penny. And core sales of $4.41 billion, that came in comfortably ahead of the estimate. Just solid execution all around. But, the beat itself doesn't even tell the whole story. The real power here was in the momentum. We're talking 14% year-over-year sales growth in the quarter. For the full year, EPS grew a huge 29%. That's twice as fast as sales. And crucially, they hit their 20.2% operating margin target a full year ahead of schedule. The business was just firing on all cylinders. So you've got this incredible performance as a backdrop, right? And then management gets on the earnings call with an extremely confident, extremely bullish narrative for the future. And it was all centered on demand from the biggest names in tech. The big headline grabber, of course, was this monster deal with Meta, a multi-year agreement worth up to $6 billion. This is just a massive validation of Corning's technology, especially for building out those advanced data centers that you need for generative AI. But here's the real kicker. The CEO, Wendell Weeks, made it crystal clear this wasn't just some one-off win. He said, and I'm quoting here, "We're in the process of concluding several additional agreements of similar size and scale." What he's telling you is that a broad, industry-wide hyperscaler contracting cycle is happening, and Corning is right in the middle of it. And you can see that confidence just ripple through their whole long-term strategy, which they call Springboard. They didn't just meet their own expectations. They totally raised them. Management jacked up their incremental sales plan by almost $2 billion. The message to the market was loud and clear. This opportunity is even bigger than we thought. And this optimism isn't just about the long term either. It extends right into the immediate future. Their guidance for the first quarter of 2026 projects around 15% year-over-year sales growth and a whopping 26% jump in EPS. These are aggressive numbers, and it signals that management really believes this momentum is still accelerating. Okay, so let's recap. A clean beat, a massive new deal, upgraded long-term targets, and really aggressive near-term guidance. The bull case is pretty obvious, so let's finally tackle the paradox. Why in the world did this stock sell off? Well, the first critical piece of this puzzle is context. Expectations were, simply put, sky high. In the 30 days leading up to this report, Corning's stock went on an absolute tear, running up over 17%. And the broader market during that time? Basically flat. The whole GenAI and optical narrative had already fueled this massive rally. The trading day itself was just a wild roller coaster. In pre-market trading, the stock was pointing to a huge 16% gain. But once the market actually opened, all that optimism just completely evaporated, and the stock reversed course to close down almost 5%. A classic, absolutely brutal whipsaw. And listen, this wasn't just some quiet drift downward. Trading volume exploded. We're talking nearly 3 times its 50-day average. This is the classic sign of massive profit taking. You had investors who rode that 17% wave up, and they decided, you know what? It's time to cash in the chips. So when you put it all together, what you have is a quintessential sell the news event. The story was phenomenal, no doubt about it.
But the stock's run-up had already priced in not just a good quarter, but a perfect one. So when that perfect quarter actually arrived, there was nobody left to buy, and the market simply took profits.
Okay, so that explains the crazy price action. The market kind of hit the reset button on expectations. So where does Corning go from here? Let's turn to our forward-looking take. From our perspective, it is all about execution now. The story is out there, now they have to deliver. So the key things to watch are, first, are they going to announce those other big hyperscaler deals? Second, can they deliver on the manufacturing ramp for their new high-density optical products? Third, hitting that aggressive Q1 guidance is pretty much non-negotiable. And finally, you want to watch how the margins are impacted as they ramp up their new solar business. So this brings us to our core investment thesis on this. The fundamental, long-term bull case, driven by that huge GenAI demand for Corning's technology, that is absolutely intact. That has not changed. What has changed is that the stock's price just got a little ahead of the story. So the market has reset its near-term expectations and is basically in show-me mode now. The narrative is powerful. Now it's all about delivering on it. So, balancing that incredibly strong long-term growth story against this near-term price reset, our rating on Corning is outperform. We believe the fundamental story here is just too strong and will ultimately win out as the company executes on these really significant opportunities.
And of course, just a final reminder, this analysis is for informational purposes only. This is not financial advice.